Good morning, everybody. Morning, Mark. How you doing, Mr. Williams? You good? Seems a bit of a weird morning this morning, doesn't it, guys? I don't know. It's like the excitement of the last couple of Mondays with how the market's been moving has just sort of died down a little bit, I would suggest. So for me, I don't know. I just woke up this morning, looked at things, and there's not really anything I can cling on to, really. There's the volatility of last week didn't really take us up to where I thought it would, or also down where I thought it was. So basically, with us breaking 15k last Tuesday, I was thinking to myself that could possibly happen on the Monday and Tuesday. Now we're back above 15k, but we still haven't really like probed upwards how I thought we would do. And when you're looking at it this morning, it's just, I don't think there's not really any edge that I could sort of gain from looking at what we're doing. Like, let's just delete all of these. You could argue, if you were using your like stock charts for dummies sort of price action stuff, that this is an inverse head and shoulders in the building here. You've got left shoulder, you've got a spike low as a head, and you're sort of building a right shoulder to have a probe up. But it just doesn't fill me with excitement looking at the price action at the moment. The daily, as I've said, the daily still looks awful, relatively awful. I know we had the stick save beneath the level, which everybody could sort of see. This huge level here that we pointed out, and then obviously this level here, we're back above that with this daily hammer. But there's just nothing to get too excited about. There really isn't. I would have much preferred us, with my traders head on, to be below 15k this morning. Open up some volatility. But we're just sort of camped. We're back above 15k, but we don't look bullish. And do you want to be getting short with that daily hammer there and that close back above 15k? It really is tough looking at it this morning. So I think a little bit of patience is going to be required. We've got a big balance to contend with also. There's your balance high, there's your balance low. For me, that's obviously my balance low. I know other people use a different one, but that's my balance low and that's my balance high. I don't know, it's a tough one. So, can anybody else see any edge? Because I could not see nothing. I can't see any edge. There's nothing here for me. Is the sound okay, first of all, Matt? Just check that. It should be. I'm getting it on my microphone on OBS, so have a little look. See if it's anything to do with your sound. It does look like a false breakdown, doesn't it, Nick? That's the first thing that jumps out to me, is looking like a bear trap, should we say. And I got trapped in that trap. So, but yeah, definitely a bear trap for me. That's what I would suggest. But it doesn't look like we've seen the move up. We haven't seen what I would have liked to have seen. Like bear traps for me, they normally just looking at it. If this is a bear trap for me, this candle here. If this candle here is a bear trap, similar to this one here, because you would say that that's a bear trap, wouldn't you? As well, that's like a fake low. When we faked out this low here and we've got the pin through it and pin close high, you would say that was a definite bear trap. But then we've done it again with this other massive big hammer, but still we haven't been able to get going and get out the races and get any higher. It's like we're stuck between a rock and a hard place. You can tell that the market's been stopped from cracking off, but then also we just haven't got the momentum, the buyers. It might be down to fundamental reasons, I just don't know. But we're just not propelling higher how we were before. I think you can see, can't you, that on all these lows here, have a look and judge it for yourself. Like, look at it from... So have a look at the market and look at every single time we've broken a low. You can see it here. We broke that low there. This is a low. We stick through it. We just smash up. So... this low here gets broken on this candle and it's just a huge rotation higher. But something's just changed, hasn't it? Like ever since this low got broken here, we didn't go higher. We didn't do what we've been doing previously. This low gets broken out here, we go lower. Although we had a sharp rotation, but we never actually closed above the swing highs again, and it's the same here. We take out this low with this candle and we don't do nothing. We take out this low with this big hammer candle and we don't do nothing again. Now it just seems odd to me, that does. looking at last week. When I got trapped on Tuesday in that trade, I thought there's high odds that we're going to be back like up to 15.8, 15.6 by Friday, because obviously if you're trapping through a massive daily level, like if it's a proper trap, they make you pay, like you're on the wrong side straight away, you know about it, and that's sort of what propels the market higher. All the people who are trapped, they have to get out of their positions, and they have to press buy basically to get out of their positions, and along with the buy orders, it sort of rockets the market higher. Now we aren't. Now I think, looking at the price action, if I was going to say the highest probability for me would say that we're going to go lower again here, but as you know, last Tuesday I got caught massively short, and I think quite a few people did, and it sort of puts you off being short, doesn't it? Because you're sort of judging that around 15k it seems to be, every time we get beneath it, they seem to punt it back up and shove it back up your arse. Now, but if I was a betting man looking at this here, I would suggest that we're more likely, after seeing these like these last few days after this stick save, I would suggest we're way more likely to go and have a look down again rather than up. But do you want to be short? This is the thing. It's a tough one. If I was bullish though now and I'd brought that hammer candle, I'd be worried. Like you would be, wouldn't you? Is anybody long the DAX or swing long the DAX? Because for me, if I was bullish in here and I'd brought this trap, and even still, the following Monday we still haven't got going, I would be worried. I really would. Like, why are we not going? What's going on? Now, obviously, we could just go straight up. We could get some fundamental news to do with the DAX, injections of more stimulus, whatever, and we could just smash back up. But we don't know that yet, do we? But this would worry me if I was bullish. Definitely. I'd be thinking to myself, what the hell's going on? Why have we not pushed up? Because you'd have to argue that if you're bearish, if you were selling into here and you're bearish, and then where's your stop going to be? It's probably going to be above this daily high, this daily high. If you swing like a swing trader, it's going to be above these highs, isn't it? So I would, if I was bullish, I would have wanted the market to expand up a lot faster than it has done. It wouldn't fill me with confidence anyway. So you're still long from last week's swing low, are you, Mechanical? Interesting. Opening range algo says no day trade for me today. Yeah, I'm thinking the same, but we'll have to just see. It really is a tough one with the DAX. I think there's probably better markets out there to trade at the moment. Do you want to be selling it down here just around 15k, knowing that that's like a massive number in the market where they've tried to keep it up from that point? I don't know. It's a tough one. But still, there's no trade for me anyway, because we're still smack bang in the middle of the opening range anyway. So there'd be nothing for me at all, I don't think, this morning, until we break out one side and we get a pullback of some sort. Anybody call the trade? How are you doing, Sierra? Call the trade for me. What can anybody see? I've been backtesting an oil strategy I have all weekend. It's looking promising, to be fair. Oil opening range. Trade it like a sort of mechanical trading system. Slightly different entries than the DAX, slightly different entries. Using an indicator to get me in though, because I wanted to make it completely mechanical. The entries and exits on it, and it's looking very promising. It really is. It's looking good. Again, the win rate's not brilliant, but the actual overall R winners are very big once the market gets going. Morning, Dave. Morning, Aves. How are you doing? Yeah, it's a quiet morning this morning, guys. Monday. It's one of them. I think we might have a quiet day ahead. I do. Just nothing. There's nothing come out over the weekend. I don't know. Friday's action wasn't brilliant. If you're being honest with yourselves, it wasn't great, was it? Friday, really. Poor price action, quiet Friday. So I'm thinking maybe we have a quiet day today, and we just chop around this opening range for the most of the day, and not really. We highly probable that we don't sort of get a trend going maybe until at least the American session opens up. You got to keep your powder dry though, guys, haven't you? This is trading. It's tough, especially when your account's down or you've had a bit of a losing streak, because you want to win it back, don't you? These are the emotions that come out at me this morning. Like I want to win this back. I want to get my account back up. But if the market just isn't moving, then you've got to just be patient. Really, there's nothing that you can do. Morning, Merlin. How are you doing? Nice to see you in here. Thing is that anything with a really good trend, surely your strat has a good chance of winning. It's the choppiness that gets you. It does. Beat yourself up. This is the problem, and it's tough to deal with drawdowns, isn't it? Knowing that the market's not trending. You know your strategy is not going to be making much money, so you've got to just. I find turning off completely and just put alerts in, and then at least just go and do something else. Yeah, I love that platinum chart that you put out Friday, Sierra. Are you trading that? That's a clean looking chart, that is. If anybody's not seen that, have a look at it. Right, platinum on a longer time frame. I've seen a few people. The thing that worries me about it though is I've seen a few people tweet about it this weekend. You're not the only one, Sierra. Now I know you were relatively first on it. To be fair, obviously you were the first one that sent it to me. But since then, this weekend, I've seen quite a few people who are all sort of trying to point you towards platinum as seeing like, well, right, this looks really good. So just be careful, because when it starts going a little bit mainstream on Twitter, it tends to sort of be, that's when the traps start happening and stuff like that. But let's just pull it up and put it on the workspace. IG's charts with platinum are so rubbish. But basically, everybody's sort of thinking that this is gonna break out and run. And however, you can sort of dress it up however way you want. You can put like a breakout of the downtrend line on there, and you've got your weekly close through it. You can say that this is what I'm saying to you about technical analysis, guys. When the market moves in a trend, they all work. All the indicators do, and this is the overall context that I always tell people that you should add to it. All indicators work when the market's moving. They just do. Trend type indicators, there's no holy grail. They just all work. And whatever you want to do here, you can say it's broke out of its downtrend line. You can say that it's hit this new supply area. There's always of dressing it up. You could say that's a supply area there. You could say that you could also say that it's hit a horizontal support. You could go on to a moving average now, and you could be looking at the moving averages crossover. I bet if you put a Donchian channel on the daily, it would have broken out through its Donchian channel through this point here. The moving averages will have crossed over to the upside. But at the end of the day, they all work. The context is that platinum looks bullish, and it looks like it's going up in its bottom. So whatever indicator you overlay on there, it will work. It does look like a nice chart, though, I would suggest. For me, I would like it to clear this level here, and I think then it's gonna potentially go to the moon, because there's nothing in its way really for me once it's through there. Like that's the key level for me. We're through this one, and it'd be nice if we could mess around here and trap a few people and then drop back in to these areas here, like that rollover. Create, that's a left shoulder, this is your head. Create a bit more of a consolidated right shoulder and then go. But it does look like a nice chart. What Sierra's mentioning to me is now you've got the context that platinum is bullish. So the overall context to you, and this is how I like setting things up, by the way. You've got the context, right, that platinum's bullish on the daily and on the weekly. So now you can start adding a sort of overall extra context layer to your trade. So whether you trade a moving average cross, whether you trade an opening range breakout, whether you trade whatever you trade, right, the overall context of platinum is that you think it's going to be bullish. So if you're trading a system, a mechanical system, only trade platinum long. So you would, from this point this morning or last week when Sierra sort of pointed it out, you would only, with your system, you would only trade platinum long. Can it improve your overall hit rate? Can it improve your overall profits? I imagine it can. because you've got an overall bias, a context that you can add to it. So let's just say that we were trading the opening range breakout on Friday. And I think this is going to be obviously more of a better day than average because it looks like it went absolutely parabolic. But just to set it up, you can say to yourself, like, right, okay, we are only going to trade long when we get above the opening range. There's your opening range high. This is your opening range low. Like that point. And you could even say, right, okay, I'm going to just trade the retest of the top of the opening range and trade it mechanically. So we take the roof off the opening range, we rotate back in and retest it. We get one green candle that puts us back above the opening range, and that would be your long, and your stop would go just beneath there. Now that sets up a very nice context for a trade, doesn't it? Because you can clearly see that if we, as I've said before, right, we never get a proper uptrend if you're in between the opening range or below it. It doesn't happen. You don't get uptrends below an opening range. It's impossible. You also don't get downtrends above an opening range, do you? It's impossible again. So you can argue that your stop's correct. If the market comes back into that opening range, highly likely, you know, from that point forward, unless you get back above that point, there's not going to be a trend there for you. But you set your context up, you hit the trade, you get the close back out of the opening range, you've seen a lovely perfect retest, stop beneath the low. And obviously, look, I mean, the R would have been ridiculous. I'm not saying that anybody would have held all that. You'd have to be a proper ledge to do that because there was just huge gains from the R that you would have risked and leveraged into it. It would have been massive. But that's the power of the overall sort of context to it. Again, so you come in today, right? You're bullish platinum. Why? Because the daily, the monthly, the weekly are all telling you that you should be bullish platinum. So you draw your opening range in again. Okay, you've got your opening range high there, which is 725, and you've got your opening range low, which will be that one, that this candle here, I think. Yeah. Okay. So I would suggest, right, that this is how I would look at this trading system for platinum. You can buy the breakout or the pullback of the breakout like I do, but I would suggest also that in very bullish markets, and this is what I was doing with the Dow and the DAX on like a year and a half ago when it was trending like, I call it like a proper sort of established trend, which is not what we're in at the moment, by the way, on the DAX. At the moment on the DAX, if you pull the daily up, we're in a big consolidation. But when you get an established trend like this on platinum on the daily, I don't mind buying the trap at the bottom of balance like that. I think it's a good entry. So why would that be a good entry, right? Okay, so if the market tells you that it's reclaimed its opening range, it's moved through it, and it only moved through it very, very slightly. But the minute you get the push through it and then the close back through it, that to me could be an entry. It really could. Why? Because you've got your monthly, weekly, and your daily that are bullish. They've attempted to move the market through its opening range. It's failed straight away. One candle, not happening. The market isn't accepting that we're going to be spending any time below its opening range. So for me, that would be the first entry of the day. I didn't obviously take this one, and I'm not saying that I've made millions of pounds by trading it, but you can see the context that I'm trying to give you. I think that's a great entry because the market's massively bullish. Everything tells you that it's bullish. So, and the minute that it goes through its opening range and closes back through, that for me is the first bullish sign of the day. It's got to be worth a punt. It really has. So your risk would go beneath this low, and your entry would have been at like 1.030. Okay. Now you might have waited for this to close back above the opening range and give you some type of a moving average cross or a Bollinger Band breakout on a smaller time frame, whatever. But for me, the market's, that's not guesswork, is it? The market's telling you that it's at this point in time, at this period in time, at 8:10, it is not prepared to spend any more time below its opening range. So that could be your first trade of the day. Now, whether or not you'd want to take profits in here, whether or not you'd want to try and scale out as you hit the opening range, and then you'd be looking to take another trade as we break through it and pull back, or if you want to try and build a position and you think that we're going to attempt to break out of this area, this could just be your first scale. Like, you could trade it like, if you're bullish a market, right, and you've got 3 scales, and the market pulls back, this is how I would look at playing it. I would say, right, okay, I'm going to take my first scale here on the close through the opening range, but I'm not going to trade my full position from there. I'm going to add if we go lower and close back above it, and you could give yourself a stop that's slightly lower, and use your opening range as like an overall sort of scale point, where if you go lower for opening range, you're going to add another scale, but then when you get back above opening range, if your context is proved right later on, the 2 trades that you've taken in here that have given you a profit by the time you get back above it, because we are expecting the market to be bullish, aren't we, right? So if we get above the opening range, the profits that you've rolled together in these areas, you can then add a third position, because your overall context has been proved right when we break out the top, like so, and then pull back, and then you're going to leverage the other 2 positions into an overall bigger position and punt on it that we're going to be going up, like so, and play the probabilities rather than trying to get every directional sort of trade right in your favor, which is tough to do. It is tough to do. So there's loads of possibilities. Like, how would you build a case? How would you build a trade around the opening range with a longer term bias? So that's just trying to talk you through how I would be thinking about setting something up with it. You could put the daily pivots on, and you could maybe put, like, even though the opening range is here, you could maybe have your overall stop below a daily pivot or an S1 sort of support. Because why? Because you're not expecting it to go down there, are you? And if it does, you get stopped out on your 2 positions you've taken in here. That's fine. Tomorrow, you come back again and do the same thing. As long as your risk to reward is going to be right, and you're expecting this thing to, really crack on and push on, you're going to get paid eventually. Way more than way more than you've lost on your little scale lanes to try and get along the market. So does that make sense to anybody? I'm just trying to set up how I would try and look at it. I say hello to everybody anyway. I'm going to try and keep this one short this morning, guys, by the way, because there's not much going on. Ian, how did it go, mate? How did that birthday go? Did you have a good weekend? Did you enjoy yourself? Spend much money? I bet he did. He's a bowler. It's bank holiday in the US today as well, Columbus Day. Yeah, it's one of them, isn't it? I don't think there's going to be much in it for us today, guys. I really don't. I don't think so. So I would just say to everybody, right, keep your powder dry. You're going to have to see something that really sets up the day to sort of tempt you into the market, I would suggest. You won't be way better off keeping your powder dry. Yeah, I saw that, Sierra. I saw that you were long. It was a good trade, that was, pal. Just back from 2 weeks in Corsica with the family. Back to trading. So look, fantastic. Was it good, mate? Was the weather good? Corsica sounds amazing. Lovely. Very nice. How did you get there? Whereabouts do you live, Silok? UK? I'm just wondering how you got there, who you flew with. British Airways, Thompson, let me know. Morning, Kyle. Definitely feel Mondays are better than Saturday and Sunday. Yeah, you know what, Sam? I've been thinking about this all this weekend. That's what I've been thinking. I've been speaking to a few people about it as well. I would love to do something like that, as I was talking about on Friday about getting some sort of online prop firm going. Got a few little irons in the fire. I'll have to see what goes down. Just need to get it set up. It's the right software that's needed. I've had a look at a few different sort of ways of doing it, and it's all about the software that you'd need to get it right. I would like it to be, something where everybody's balances were in. So you're all on the screen together, like I am now. but everybody's balances were in, not like a league table, but everybody's balances were in like a little extra bracket, so that we can all be our own risk managers. And you can see, so not potentially like when someone's got a trade on, and they're like you're watching everybody's account tick up and tick down from the trade that they're in, but they're their overall balance. So if once a trade's completed, you see the balance get knocked down or knocked up, and everybody in there can see it. So it's like a video game, Sam. So it is like a video game. So like your COD score on Call of Duty, when you're playing it as a team together, you can see who's got the most kills, you can see who's not done so good, and then you can help that person. You can all help that person. I think it'd be really good, but it's just the software's going to be difficult to sort of make. I do know somebody who's got something though, who's got something that they could potentially use, but it's just, I don't know. We'll have to see what happens, but I think there could potentially be something coming, hopefully, where we can all get involved. But it's how would you place it? Like how would you place it where people? It's a tough one, because you want to all be on the same sort of mindset. You want to all sort of be at it together, don't you? So, and also I think the room would have to be relatively small. But then it's all things like cost, who pays for it, like how much does it cost, is it going to be open? Then it all becomes quite shilly and stuff like that, which I don't want. But I don't know. We'll have to see what happens. But I don't want it to sound like any sort of like shield business or anything like that. I prefer it to just be all open to everybody. But then I think what will happen is you'll get like, there'll be that many people in there that it won't be how I'd want it. I'd want it like quite small, with like a small sort of like-minded group in there. But it would all have to be very open. You'd have to share your account balances and stuff like that, which I don't know if many people are going to want to do. But I think that's the key to overall profitability, right? That's for me. And I know people say, well, no, it's not. You've got to trade right, haven't you? You got to risk reward right? But I think that in a team, you will succeed far more than sitting on your own trading. You just will do. Why is that? Because I just think the hive mind always works better than the individual in anything. Like when they wanted to build the NASA rockets, it didn't just sit one scientist down on his own and say, go on, mate, give us your best guess. Tell us what you think. You're under pressure, by the way. We've got to build it we've got 60 days to build it. You're on your own, though. Get on with it. They got the best minds together, put them together, and they all bounced off each other. And that's how you do well. That's how you sort of push on past personal boundaries, by competing against other people. It's like you watch somebody do something and you think that you can do it. If there's no competition in life, we would have never broken the 4-minute mile, would we? It's only because of the Olympics and people that saw that person do it, and then they all did it. I think, did 6 people do it after the first person broke the 4-minute mile? 6 people the next year did it straight away. Why? Because they can see him doing it. They knew it was achievable. And I think that's what the like an online prop firm could do for people. I'm sat here talking to you guys, right? But I can't see what any of you guys are doing. We might have some amazing traders in here, who are making huge, might not be making millions or hundreds of thousands, but fantastic sort of returns percentage-wise every week. It'd be good to see, like what are they doing? How are they approaching the market? Right, okay, so he's doing that here now. And so at the end of the debrief, at the end of the day, when we have a half an hour meeting, you can ask them, like, what were you seeing? What were you doing? How did you collect the stats for that? All these types of things. I think it'd be good. But we'll see. Morning, Change. Freedom Day for us here. Yeah, so Change, it's your Freedom Day. Wulan Gabba, how are you doing? Good morning. I think Wulan Gabba, right. So for me as a day trader, the trend on anything above, say, let's say a 4-hour chart, it's just the overall context and bias to it. Now, for me, I wouldn't take any massive sort of, unless I was trading platinum at the moment, which then I would only really like to be long on it. It was similar to me how I was trading the DAX in the sort of trend in 2019. I was only really looking to get long, wasn't really looking to get short. And because the overall trend's up, isn't it? So if you're only trading long, or even on a day trader on a 5-minute time frame, your win rate will improve definitely if you're going with the overall flow of the market. for me anyway. But yeah, so Freedom Day change. What are you doing? Freedom Day. 4 beers at lunch. What's Freedom Day though in Australia change? What is it? Is it like, are you all allowed out your house for one day? Or is this just it now? Is your lockdown over? Let me know. I'm interested. I assume you're in like Sydney or Melbourne or something. Bitcoin moving today. Comment please. Cute boy. Let's have a look. BTC. I people would say it's into resistance or whatever, but I would just try and be long Bitcoin. I think I pointed out that my strategy on Bitcoin here would have had a 5-hour winner last week, and when you would have been stopped out here, you would have had another entry around here or maybe 2. Let's just have a look. You would have had 1 entry there, and your stop would have been beneath there, and you would have lost 1R, and then you would have had another entry in here, and your stop would have been beneath there, and you would currently be, let's just have a look how many R's you would be up. Risk box. Duplicate. 1, 2. And you would have hit 2R at this point here. So you'd be like 2.2R up off that second entry. So I would just suggest hold it. Who knows? Who the hell knows? It could just steam straight through. We are into resistance, so that's how I would be looking at it, pal. But I just try and trade it like with that mechanical system to sort of. There'll be a lot of people saying in here that let me just get rid of all this. There'll be a lot of people saying in here that you're banging into resistance, and they'll be saying, oh, we're way more likely to go down. This is a massive supply area here. Like that, won't they? I don't know. You guys tell me. I don't know. The thing that would worry me if I was short is trying to get short into this supply zone, and it might, like, I don't know. I don't really trade these ways, but it would just worry me that we've been up here once here, and then we're back up here again. So that would just slightly worry me. Like, if this was going to be mega bearish here, which you would think it would be, right up into supply, you've got that rounded retest that Tom Dante always talks about, and that's what he'd be looking for. I don't know if he would have taken that trade, I don't know, but he sort of says like you get a big move away from a level, and then you get like a rounded retest, like so, ping right into the level. So I think that would have been a trade for him. And then you get the smash down off the level, but then we're back up there again, aren't we? Like, why? I don't know. We'll have to see about Bitcoin. I think it's way more likely to just steam up though, and take out all these highs here and be like somewhere up here for Christmas. It wouldn't surprise me. I live in Brisbane. Freedom Day means nothing, right? So you haven't had a lockdown, have you? Change has, though, I think. Oh, lovely. Beers on tap, draft beers, beautiful. Nothing better, mate. Fantastic. He's allowed out on day release. It does look pretty bad over there. Let's try and not get into the COVID talk, though, because it always gets a bit spicy. But it does. I feel for anybody that's stuck in that. And people say, oh well, it's for their own good or whatever. But it isn't nice being locked down. I didn't enjoy it over in the UK when we were in it. It wasn't good. Just feels like the world's ending. You can't do anything. You do feel like you're in prison, really. So yeah, I wish you all the best, and I hope you enjoy it. Change, enjoy them beers, mate. Make the most of them. Trend the market. If this blows off through 15.2, taking out the 8 AM short stops and pulls back inside, you'll be short. Right. I can see what you're thinking. You're thinking we're going to roll over. I do trend the market. If I was a betting man, I would say we're going to roll over. As I've said this morning at the start of this, the daily candles for me, the dailies just don't look bullish. They don't. Even though we've had the stick save through 15k, I would have expected us to be way higher by now, and we're not. It would worry me if I was bullish that. So I think the probability is that we go down. The problem that you've got with that is it seems like we're fighting someone who's trying to keep the market above 15k. So, and you're sort of pressing short right in their areas. You've still got to do it though, and I'll tell you why you've got to do it, because the minute that they stop defending 15k, which could probably be on the next one, if we go down, we're going to absolutely shit the bed. And I mean, it's going to be absolutely like the day from hell when it breaks and they don't get involved, they don't try and save it, or they can't for whatever reason. When this thing shits the bed through 15k and it's not held, it's going to go big time. I think we could be down like 800-900 points easy. So don't get stay flexible, and that might not happen at all, right? We might just rotate back up from this point today, and we might be up at 15.5. But my point is that if we do get back below 15k again, and we unwind from that point, they don't step in and try and hold us up, we are going to absolutely shit the bed. I just think we are. We're winding up for it. It might not happen this week. They could just keep us here, consolidate. But when it actually goes, when this thing actually goes and gets allowed to unwind, we probably get 14k in a day, I would suggest. Because you can just see what's happening, can't you? They're trying to hold it. Now, people say it's pension funds. People say it's all sorts of things that, you know, the market's got to be held higher, and I agree with them. I really do. It has got to be held higher, because if they let this thing unwind, I think the shit's going to hit the fan with everything, the economy, all sorts of stuff. So I don't know if they're going to let it happen, but if my point is, if it does happen, it's going to it'll happen in a day, in an afternoon. So just be aware of that. I would suggest as well, I wouldn't want to be a buyer if we get back below 15k. There's lots of people that have tried to buy this and they're in it and they're trying to think that we're going to go back up long again. And they might well get paid. But I think if we go down again, I wouldn't really want to be buying it at all in any way if I was a swing trader. Because I just think that it's going to be one of them days where you keep trying to buy the dip, and you just get washed out all day. Not been very well again this weekend, guys. Got a COVID test I've ordered. I've got a PCR test that's come. I did tell you I'd ordered a PCR test. It didn't come until bloody yesterday morning. I'm going to take it this morning. I'm going to do it and send it back off. Yeah, you're agreeing we're going to roll over. I think so. I do think so. It feels like we're going to roll over. 14.4-ish. 10% correction. Yeah. Does anybody else feel like it's rolling over? Like the top's in. Am I on my own here? Just like, what is going on? And also, does anybody else think that they are actually trying to save it? Like, am I sounding like some conspiracy nut here? Let me know, because I don't want to keep harping on about it, because it's how I feel, right? I feel that there's somebody in the market that's holding the market up. Am I thinking like a conspiracy nut there, though? Or can you guys see that yourselves? Or because obviously we all see what we see. Like, you guys might not be seeing what I'm seeing. Just interested in your opinion. Do you think that the central banks are holding the market up, same as me? Do you think it's just how the market's trading, and that type of thing doesn't go on? Let me know, because I don't want to like keep harping on about it and sounding like a conspiracy nut. And it's not a conspiracy, is it? Like, the central banks want to keep the market up, don't they? It's obvious they do. They wouldn't be going through all the extremes that they're doing with all of the liquidity that they're providing if they didn't want that, really, because they know they're not stupid. They know that's what's going to happen when they pump the world full of money. It can only go into a very few places, can't it? Am I just sounding like a nut here? Like, let me know. Are you guys thinking that to avoid another recession? Do you think it's the ECB though, or the central banks, or do you think it's just how the market is? It's the big investment firms, hedge funds, stuff like that, or do you think it's actually been propped up by the central banks? What? So tell me who thinks the top's in? Because I was saying the other day that I thought the top was in, and nobody actually told me what they thought. Do you think the top's in? If somebody said to you today, and I know like you can't see into the future, but looking at this price action on this daily chart here, if you think the top's in, say you think, let me know. Do you think the top's in? Say, I think the top's in, or no, I think we're getting higher. Just trying to work out what everybody else is thinking and if they're seeing the same as me. I'm interested. I think the top's in. If I was a betting man, I would say the top is in. I really do. I think we're way more likely to go and fish down lower. And I just can't see us getting back up there again unless they release the bazooka, unless they get the bazooka out again and go crazy with it. But for me, that's just sort of old news now. I don't know what they, like, have we had 6 or 7 trillion in America? Like, can they release it? Is it possible to sort of go higher or release more money or inject liquidity? It's a more intense pace than what they've done over the last year. So, Sierra, you think the top is surely in? Yeah. I've seen this week that the Bank of England are on about tapering and raising rates. I don't know what's going to happen, though. Right, so you think you're on the same page as me, Mark. These fast, large gains are not sustainable. We will not gather right. Change, so you think higher into Christmas. Right, so that's interesting. That's what makes a market, first of all, but it's actually interesting. Up until December and then a drops. Right, okay. The problem that you've got with that, though, guys, Change and Dave, and I'm not saying that you're going to be wrong. I think that you've probably got just as much chance of being right as what we're thinking we're going to crash. But if you're saying we're going up until December, and do you mean from this point here in time, which you could be right, this could be the low. If we go up, I don't think we're going to crash. I can't see the drop happening. So what do I mean by that, right? So if this is the low here and we go up into December, I've said it before, I don't know if anyone's heard me say it, we don't crash from highs. I've never seen a market crash from that. I think I got this off Nicola Duke, by the way. She's a very good technician, Nicola is. And she pointed out a long time ago now that markets don't crash from highs, they crash from lows. Markets crash after sequences of being to new highs, but then it takes like 2 or 3 weeks of not making a new high. The price action changes completely. You start getting oversold indicators. So people think that markets crash from overbought signals. They don't. They crash from oversold signals a lot of the time. Markets crash after being into a downtrend, after getting below the 200 moving average, or like what we're seeing now on the daily here. Markets crash from these points. You don't ever find that a market will crash from new highs. It doesn't happen. You can get a new change from that point, but you won't ever crash from there. Now, I would suggest that if we're going to crack off, and we are going to crack off, this is the point that it's got to happen. If we get back up here into December again, we're way more likely to just carry on. We might get a pull back, but I just think we're way more likely to just steam up again and carry on and create a new sort of consolidation zone above these highs here, and then trend again and get the trend back in the market again. Because after a huge consolidation like this, and now we're turning over, if we don't crash here and we move back up, I would suggest that we're getting, we could spend at least until the first quarter or second quarter of 2022, moving higher again. It wouldn't surprise me. So I think it's got to happen now. If it doesn't happen now, bears are toast. If this thing doesn't roll over and turn over in the next couple of weeks, I would suggest bears are toast, and we spend at least the next year or even longer moving into a new trend higher again. I don't know if that makes sense to you. It would be a weird top in terms of structure to my mind. We are likely to close to a top, but personally I do think we slowly bleed up to test the all-time highs in SPOs and DAX. 2000 crash was all-time highs. Did it crash from the highs in 2000 though, Dave? Let's have a look. Let's get the SPOs up and have a look. See what? It's going to be on a monthly or a weekly. So have a look at it, right? So this is what I'm saying to you. I would suggest this. I think this is what the point what Nicola Duke makes as well is. You can see here that we're sort of starting to make. It doesn't look like the bullish trend that we've seen here, and in this bit here we sort of get into sort of this big range, this consolidation where we just fail to sort of go higher and we sort of rotate down. But I wouldn't say that we've crashed here. You know, like once we start making like the run lower and then like the lower highs and lower swing lows in this section, I wouldn't suggest that this is the crash here. I would suggest that like this felt like a crash, and I would suggest that this felt like a crash, and I would suggest that this felt like a crash here as we sort of washed out everything. And that's what I mean. It does get. From my point being is, if you're after the big sort of drop moves, they tend to happen when everybody thinks that we're going to rotate back up off the lows again, like we are now. So you can see that this stick save here, I call it a stick save because that's what it looks like to me. It's very similar to what we got on the DAX now, isn't it? Can everybody see that you've got your weekly hammer candle where you've probed through this low, you've got a weekly candle, and then you're expecting this thing right off to the races up here, and it doesn't really get going, does it? We have bullish week and then straight back down, hammered down again with a big bearish engulfing, and you just sort of can't hold this level. You go through it, they try and save it again, you know, they try and save it once, twice, 3 times, and it just doesn't happen. Now I would suggest that when this turns here, this felt like a proper crash, this felt like a crash, and this is people literally just puking up. In this area here, I don't think that would have been called like the actual crash. Yes, in hindsight it was the top, but would you have known that this is the top here until you start doing this and this? You probably wouldn't. Like if you were looking at it from a completely neutral point of view, you'd be looking at that there, wouldn't you? You wouldn't know that the rest of it had happened. So you're looking at this here thinking, right, okay, we're in a huge uptrend. Every time we sort of go lower, we rotate back higher. We go and take this low out and clip through this low here, and we've got this huge bullish hammer that's swept through the level, and you would be then expecting us to go higher. Now what happens is we don't, and we just consolidate, and then we try it again, stick save, again, stick save, and then it finally just lets go. And then that's when you know the top's in at this point. That's when you start thinking it's highly likely this top's in. But it'd be very difficult to guess until this point, in hindsight. And crashes, these crashes here are happening from oversold conditions. If you're on a daily time frame of your RSI or your MACD, you'll be oversold here. So does that make sense? That's what I'm seeing with this DAX, by the way. It's the same pattern on the daily. And that's what I mean by it. Now, it might mean nothing and we could just go high, but very similar price action. Very similar. You've got a trend up. You've got a market that doesn't accept getting below any major swing lows, and then all of a sudden you've taken out a low and it's finding it tough to deal with. It can't get back up again. You've attempted to take out this level once, twice, 3 times, 4 times, and then you've got this massive big pin bar again through the level, and we haven't managed to get up. We haven't managed to rotate off this level with any sort of real sort of buying pressure, and it looks so much like that S&P 500 chart that I just showed you. Yes, that was a weekly chart, but the actual setup's the same, and I think it's not going to be easy selling through this level, isn't it? Because as you've seen with the S&P, they sort of tried to control it and keep pushing you back up, and a lot of the time it's way easier if you wait for the first move to happen, the first move away from the level to happen, the one that breaks away from all of the little consolidations and looks like you get real momentum. And then a lot of the time you'll get like 1, 2, 3, 4 days after it, similar to the S&P 500 again, where the easiest short happens once everybody can see that this isn't going to happen, they're not going to save this level. Yes, you can get short in here, but you're going to see big volatility. You're going to go into profit, they're going to try and save it and squeeze you back up. You're going to go into profit, you're going to get squeezed. I would suggest that the cleverest thing to do would be to wait for it to give you a real direction. So wait till you're probably underneath this level here at 14.8. And then it's going to really go, and you can get on board the proper momentum then away from the area when everybody knows that area is no longer going to hold. So I hope that makes sense for anybody. It's how I look at it. Let's just see what's going on. Mechanical, would you suggest that crash from the high? Because I wouldn't. For me, a crash from the high means how I look at a crash from a high would be where you go through a high and straight away from the very high point you get the next stop is to sweep the lows in a very aggressive manner. So let's just go back. I don't know if it looks different on the Nasdaq. Like, I would suggest that that's a crash from the highs here. Do you understand what I'm saying? You could argue that this here is a crash from the highs. Now I'm not saying they don't happen. I just think that when you get this type of price action where you've had a massive consolidation for a year, and then you're going to need something like this, aren't you, to get you away from that area. Like this here, the coronavirus scare, that's a crash from the highs, like that. In 2000, I don't think we got that. I think we've got something that we're very, very more, like we're more likely to have this time, where you've got a massive sort of huge uptrend, the biggest that we've ever seen, and we're just trying to roll over, and you can't really work out what's going to happen. And you can try and get short, you can be wrong. You can try and get long, you can be wrong. And you can just consolidate, and the market's just trying to work out what's happening. It's working out if there's any more stimulus coming, and it probably isn't going to get it, and then I think it's going to roll. But this you could say that this is a crash from the highs because it's just straight down. It doesn't give anybody chance to nobody's trying to save it. Everybody's just trying to get out the market as fast as they possibly can. But on these big rolling tops like this, similar to 2000, I think this one is. It sort of rolls over and everyone's sort of like trying to fight it. We need to go back. We're going to have to wait. There's going to have to be a decision to be made. And I would suggest we're either going to take out this high or we're going to take out this low. And it's going to be one or the other. Just from a structural perspective, that high there in the DAX is dead and put. Oh, sorry, I'm on the freaking S&P. If we could say the S&P 500, right? From a structural perspective on the S&P 500, because it just looks so similar, doesn't it? It's the very same as the DAX chart with that daily stick save there through it and all them retests. If we take out that high, you've got to expect new highs. And if we take out this low, you've got to expect that we're going to crack off. And everything in between, you're going to be arguing with both sides and getting yourself chopped up, I would imagine. There's going to be no flow. So that's how I would set it up if I was trading structurally from level to level and context to context. Above this high, I would suggest you're going to go and retest these old highs. And if you get back in beneath this level here and you take out this low here, I would suggest you're going to really crack off to the downside. It does all look so similar. The S&P 500, if you look at the daily chart of that, it looks exactly the same as the DAX chart. Everything's so the same. So you're really trading one market, really. Yeah, then you've got your like changes sort of pointing out, right? He's talking about seasonality. We do not. Does anybody remember the Christmas? I think it was Christmas 2017 though, where we just shut the bed. We absolutely shut the bed. When was it? Let's have a look. There was a Christmas because seasonality up to Christmas is normally good, but I think was it 2018? It might have been 2018 where we had a really bad run into Christmas. Yeah, it was. There. Look at that one. You could argue that we look similar. We look similar to how we look now. In a way. Big consolidation, yeah. Major lows getting tested. And then if you look, October, what's the date today? October the 11th. We crack off on October the 10th. And then we just shit the bed right the way up until Christmas. I remember this, it was horrible. And then it was literally, like Christmas Eve that we bottomed. Was anybody trading this? I was trading this at this time. I was actually actively trading it, day trading it on the smaller time frames up into this point here. So yeah, I know like seasonality is always bullish until Christmas, but this was an odd year. This was. We absolutely shut the bed. It was an amazing move, really. Just like very, very, very sort of volatile, high momentum to the downside. You brought Boxing Day. Jesus Christ, you nailed that then. That was a good one. Yeah, 26th of December 2018. Actually bottomed on Boxing Day. Lovely. ...2008 was a grinding bear market. Yeah, I think that's what we're going to see, Mechanical, myself. I think that's what we're going to see, a grinding one. This is not going to be, in my opinion, this is not going to be an easy short. I just don't think it is. I would love it to be, but I don't think it's going to be easy. I think it's going to be one of these over the next few weeks. I think if this does crack off, I think we could very likely get short and get stopped out for 2 or 3 days in a row. And then the one day that it cracks off, you're going to make like 12 or 13 R in a day. I think it's going to be one of them for me, where I'm fighting somebody who keeps trying to squeeze me every time I get short. Because with my strategy, obviously, I'm going to be trying to sell lows, aren't I? Which is tricky at the moment because I know I'm trading in an area where they're going to try and squeeze the lows. That's where they buy. Like if anybody's saving a market, they're buying as the market moves lower. They're not buying the highs or a breakout above opening range. The people who are controlling the market they're trying to just protect it on the days when it really cracks off. So strategically thinking for me, right, I know that I'm going to find it tough over the next week because I'm going to be shorting right into the zone where I know someone's going to be buying and keeping the market up. So I've got to just be careful. And I think I will get stopped out a few times, but I think when it finally goes, I need to make sure that whatever happens, I'm on that day. I'm in that market because I think it's going to. Yeah, Dave, exactly. That I love that. That's a good quote. I think the same as you. All of my trades that I don't think are going to work normally work. The more conventional entries are the ones that don't. So I'm just going to have to steam in. If this thing cracks its opening range off and gives me an entry at the low of the day, I can't be a fanny about it. I've just got to get short and just take the losses if they happen because it could well be the biggest day of the year for me. So there's going to be no being a fanny. I've got to just make sure I'm, also you've got to make sure that you're aware of what's going on, guys, because this could go at any point, I think, this week or even next week. It could just unwind. And if you're away from your computer or you're trading a mechanical type system and you're not on the ball or you're doing something else or you might be out for the day, you're going to miss a huge day if it happens without you. Does look awful. It really does. Doesn't look good. I think for me, I just hope we don't spend any more time in this range. That's what I'm hoping. I don't really care what we do. I have really no bias to it, really. I aren't bothered if we go up or down. Obviously, I would like us to go up more because I think when we go up more, the world is not a happier place, but you don't want to start seeing businesses unwind and people lose their houses and stuff like that if it gets bad out there, do you? Like, for me, that's a bad thing for people. And I hope that doesn't happen, but it always does happen, doesn't it? If we get a proper big sort of recession type, especially one that takes a couple of years, 2 or 3 years to get out of, it normally does happen. So I don't want to see that. So I would much prefer us to go higher from a personal level. From a trading perspective, I just don't want us to spend any more time in this range. It's driving me mad. It's really tough to trade my system with it, as I explained to you the other day. It's all or nothing. It sucks, really, because the problem with my system is at the moment, if you miss a day, it really puts you back, or you miss one trade, it can put you back, because it's lose, 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 make 6R, lose, 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 make 4R. It's like the win sequences and the R profile is just very sort of volatile because of the range that we're in. I would much prefer a nicely trending market, like oil, right? Which is why I'm looking at oil. And I know I'm looking at it exactly the wrong time, but I just think with oil, there's always a trending market with oil. It's very rarely that it consolidates for long periods of time like the DAX seems to, and the equity markets are seem to at the moment. So I'm not saying I'm going to change to oil or anything like that, but what I'm backtesting at the moment, if it turns out to be profitable, I'm definitely going to add it to my trading, which I'm sort of. I think I've just done a few back tests with it at the moment. And what it is with backtesting is it's so tough to sort of not, like how I want a backtest, right? I don't want there to be any discretion, none. And it has to be black and white. But when you're backtesting, you sort of see other nuances and stuff like that, and it can take you down different paths and different rabbit holes. So it does. Once I've got my system that I'm happy with, I'm quite fast at backtesting even by the eye. I can do a couple of months worth of data in an hour or two very quickly. But it's about looking at all them nuances, and you always see new ones as you're coming across things, and you're trying to work out obviously if they add or take away anything from your strategy. So, and I like to do it by eyeball. I don't like to do it by any sort of algorithm, because this is how you pick the nuances up in what you're seeing on the chart. So potentially got something good coming with oil, and I will be trading it basically if I can get it fully mechanical, which will be interesting. Yeah, I do mechanical. Yeah, I do factor in my spread. So, but how I would do it is my entry would always be plus or minus my spread straight away, if you know what I mean. From a so when I'm going long on the chart, I will always add the spread into it and move my entry or my stop to make sure the spread is in it on every single one. How many do you go back? How many months do you go back, Mark? Right. So for me, I try and go back 6 months first of all to see if what I'm currently seeing in the market makes sense and if it looks like it's good. Now, you could say that, well, that's not a big enough sort of picture of time, and it might mean that what you're seeing just wasn't working for 6 months, or was working for 6 months and then wasn't working for the 2 or 3 years before. But it's more about just seeing how something works for 6 months, looking at it. I think over 6 months on a 5-minute time frame, there's enough data there to sort of get your head around if, one, it suits your personality, because it might not do, what you're actually seeing, the volatility of it. 2, if it's profitable, or if it's break even. And 3, over them 6 months, like what stands out of you? What are you seeing? Like, can you make it in any way better? Is the different sort of context biases that you can put into it? Is the opening range is it working really? Like, is it adding any sort of context or any edge to what you're seeing on the chart? And then once it is, and I know the probability of the overall sort of opening range breakout, and average payout of the days that end at the high or low of the day, then I start working backwards from that point and trying to add in a mechanical type strategy to get me an entry, and then working out the actual overall profitability of each entry, if you know what I mean. So I start with the bigger picture and then try and work backwards. So that's how I look at it basically. And then it can be any indicator entry. At the moment though, I'll tell you what I'm trying to do. I'm trying to work out a retest of an opening range on oil, basically. But I am looking at one where, let's say you've got a 4-hour chart that's trending, and you could put a moving average in there, couldn't you? So you could say, is the 4-hour market above its 20 period moving average? If it is, right, so if you get an opening range, as I showed you before, where you got the close through the bottom of the opening range and then the close back into the opening range, that would be a mechanical entry for me. But as long as you're above the 20 period moving average on the 4-hour chart or the daily chart, you might make it the 50 moving average, you might make it the 10. But why would you be buying the fake out of the low of the opening range in oil? Right, okay, well, because the overall trend's up and I'm expecting the market to go higher. So that could just be a mechanical system on its own. You could use that on its own to give you an entry, and that could be a very simple trading system. I don't know if that makes money or not. I'm just putting it out there for people where they could potentially start with something like that. It makes sense to me, does it not you? If the market's above its 20 period moving average, let's say exponential average, if the market goes through its opening range and then closes back above it, that to me is a bullish signal in a bullish market. I would say that's good enough context to try and get long the market. Could you do it when the moving average is up rather than flat? Definitely, but you probably see more a higher win rate from that. I don't know. It's something that you'd have to look at and delve into yourself. But it's just that's how I try and do it. Basically, set up a context with an opening range and a trend, and then try and give yourself a mechanical entry to get yourself into that trend with the smallest risk reward possible and the maximum payout. And I've said before, right, the maximum payout's 9 p.m. for me, because if you get a trending day, highly likely you're going to close at the high of day or within 10% of that high of day. What do I mean by that? So if you go and pull up a chart of oil and you see the big parabolic move last week, you will see that at the end of the day, you close at the high of the day. So you want to hold the bulk of your profits until the end of the day if you trade in a trending system. It's the same with the DAX. You will make way more by doing that. It's just the hardest thing to do though, and that's why a lot of people don't do it, because it's just easier to take 2R profit or 3R profit, because nobody likes holding the profits all day. It's really tough to do, especially if you've had a few losers. Like, you know, for me, I'm not going to lie, the current state of my account at the moment, you know, if I get a good day, if I get a good trend day that appears, I'm going to find it very difficult not to sort of scale out of my trade too quickly. It's going to be tough, but I'm going to have to do it, because at the end of the day, I'd be costing myself money by not doing it. Got to stay with the market until 9, which is going to be tough, but I'm going to have to. Got to do it. You got to stick to your system. When's the last decent day we've had on the DAX? Let's just see if we can just scale out and have a look at it, where you've got your big sort of trend day down. Look at that there, right? This is what I mean by the 9 p.m. close. This is a solid downtrend. Yeah? Now, there'll be so many times when everybody thought this had bottomed for the day. So many. You can put whatever indicator you want on there. You could have a divergence indicator. You could be thinking, right, this level's going to hold. How many times would you have thought that this market was going to bottom in a day? And look where it closes. Right there. Right, that's the low of the day. The market closes in here, in this point. Look how close we are to the low of the day. So close, it's unbelievable. So that's something that I want to sort of lean on to give me an edge, to get me into the market and to get me to hold for the rest of the day. And that's the only thing that I can sort of lean on from a context point. The rest in between, I'm not worried about. All of this here, once I'm short, and this is what I'm saying to you, all I'm trying to do is get a position and get on the flow of the day and then hold to the end of the day, if I can do. And all the rest of it in between, you're just costing yourself money by trying to guess what's going to happen. Because the one thing that I always go back to is, if it's going to be a trend day and you're going to get paid, the market's going to go down all day in your favour. And whatever you do in the middle of it is going to cost you money. That's it. So it basically is. That's what's going to happen. So you've got to get into the frame of mind of holding some. If the market tells you. Now, there's only certain little nuances that you can get from how do you spot a trend day. It's tough, but I would suggest that the first point that you should be looking at, and I aren't some trading oracle, some trading wizard that knows everything, but if you get a clean break of balance, that's your first pointer for me. The first pointer, a clean break of balance. Now, it can happen early doors, it can happen in the afternoon, it can happen in the morning, but if you get a clean break of balance and momentum away from it, at that point, if you're short, you know, why not just think, right, okay, well, I'll take 50% and I'm going to hold 50% till the end of the day, and I'm not going to get out of it whatever happens. I'm going to hold it all day. And you'll be surprised. You'll need to do it once though, this is the thing, because you'll get it wrong. And you'll wish you would have taken your 2R or your 1.5R or whatever you take. But the day that you get it right will make you realise that you should be doing it. But there's certain pointers that can sort of help you into realising that it could potentially be on. The first one is the clean break of balance. If you get a clean break of balance and momentum away from it, it's potentially setting up where you could get a trend day. Yeah, so right. Yeah, they are, aren't they, mechanical? The spreads are dear. Crude's a big spread, isn't it? It does suck, really. Yeah, they do tighter spreads with futures. I agree with you. You're trailing 50%. Right. Trend the market, right? So have a look at your stats, right? Have a look to see if you didn't take the 2R and you left the full amount on till the end of the day. I would argue for any day trader to do that, right? Go back for your last month's worth of entries. I said it before. Have a look if you just left everything on till the end of the day. Because sometimes we trade for the sake of trading, right? And we're just making a broker rich. And I always say that, I said to Sierra last week, right? Your first entry is going to be your best entry a lot of the time on your indicator. The rest in between, it doesn't really, you can just get chopped up by thinking it's going to go up, going to go down. If you're trading into a resistance level and you're trading a moving average cross to be the move away from it, just take the first one and leave the rest on, just leave it. And then I'd be very surprised, right, if any day trader can pull an entry up over the last 30 days that hasn't gone to like 10 or 15R if they would have just left it on. You might find that the issue why people don't want to do it is, though, they don't want to do that style of trading is because they don't like, you will be long a lot. You will have to give profits back and you'll be long like a hell of a lot. But you'll find that the days that really went for you probably will have paid you more than your discretionary entries by just getting in the market in and out of it every day. I tell you what, I would like to listen to that from Mark Wogan. I'd be interested for him because he's obviously a trading short time frame scalper. I would be interested in working out that if on the days where he's getting long or short, if he just held every position, his first position of the day, and he held it all day till 9 p.m, And he put his stop in, so his normal stop, and he held that position all day till 9 and didn't close it. On the day where he's outside balance and he's trading away from balance with his entry, if he just left it all day till 9, I would suggest that he would probably make more money by doing that and leaving that one position on till 9. And I don't mean when he's inside balance and we've got a choppy day on the DAX, that would be suicide because you've got no direction. But on a day when you broke balance to one side and you're above it and you're trading long off a level, what are his stats for that? I bet he could have some huge days. Because if he's using like a 10-point stop and he's hitting a level, he could probably make like 20R on one of the trades. Easy, I would suggest. Wollongobber, right? I agree with you. I don't know if it is though for me. Is it easier to catch 10 1% moves than one 10% move? I don't know if it is for me. I would suggest it's easier to catch the 10% move one time. Because you're way more likely to if you're trading more, you're way more likely to take more losses. Whereas if you can just try and add up an overall context to really sort of like get your head around what could be the right day for you to be making money on, I'd suggest it's easier to try and get on the 10% move myself. I might be wrong though. Other people might think completely different than me. Right, Josh, so you should have left a runner on the Euro long on Friday. Should have left a runner. Yeah, it's tough though. I don't like leaving runners on a weekend. I don't, because you can get them shoved up your arse if something goes drastically wrong over the weekend. You've got that risk, haven't you? So I wouldn't do it over the weekend personally, for me. But obviously, if you thought that would be something that you could capitalise on, then go for it. Can you have an open mind if you still have a position on? Yeah, that can hinder you, can't it, Josh? That can hinder you. You're saying like, well, if you've got a position on, you might not want to be doing any more trading, and have an open mind to what possibly could be happening because you've got that bias of that trade on. That's possible. Yeah, I've seen that PAX group opening range breakout strategy. His opening range is so tight though, isn't it? Does he use the first 10 seconds, Nick? Yeah, you could do that. That's a good point, that, isn't it? Convert it into options to avoid weekend risk if you want. It's all easy in hindsight. Yeah, I agree with you. We aren't hindsight traders here, though, Wollongobber, are we? We're in the trenches, us guys. It's tough, isn't it, trading? It really is. It's the toughest discipline I've ever done. I call it a discipline because it really is. I think I saw a tweet at the weekend. I think Miad was saying that everybody wants it now. Nobody wants to deal with drawdowns. Everybody wants to be up. It's just not like that, is it? Yeah, I think so. Trend the Market, go onto YouTube and go onto the PAX group, opening range strategy. I have seen some of his stuff. I've had a look at it. Nick makes a good point. It's like he does a YouTube thing where I think he's good mates with Anthony Crudele as well, you know. He used to actually be a pit trader, I think. I think he was a pit trader in the S&P pit. And he basically uses, I think it's the first 10 seconds or the first 30 seconds of the day's trade, and then he tries to get long above it and short below it. But for me, when I've looked at it, it's so whippy. You've got to be so fast, it's unbelievable, because that first 30 seconds of trade on them US equities, it just whips up and down. So I don't know how he would be getting long or short. For me, it becomes very, very difficult. You could have like 5 or 6 goes at something within a minute and be stopped out of all of them. Yeah, the first minute, the first M1 range, I think. It's tough, that is. Chicago, right? Yeah. Oh, yeah, my stomach's rumbling. It would just be too fast for me, that would. I'm not saying it couldn't work, and I assume that all of his group do well, and he's definitely, he's an S&P pit trader, so I assume he's done well. But for me, that would just be too quick. There would be too many decisions too quickly to make on the open. My head would probably turn to jelly. I would suggest that you could probably do really well with a mechanical, like with an actual algo trading that though. If there's any edge there, I would suggest that if you got an algo that could trade that for you, you might be better off than trying to do it discretionary with your own brain. Because I imagine there's just too much information to process so fast. I use the Asian box as my range in the rollover open. Right. Five-minute opening range breakout in my testing. I've had 20 first break stop outs in a row. Right. See, that can happen. A lot of the time it gets faded. You see, this is what I say to everybody about my DAX strategy. I don't like to trade the first breakout of the opening range for that reason. It tends to be a sucker's move. The first one does, and I imagine that's what's going on there. Change with your S&P 500 or whatever you're doing with the American markets. The first move tends to get faded. I know that because I actually trade it when I was scalping the first move. I would always try and fade the first move through an opening range on the Dow and the Nasdaq especially. And a lot of the time it will spike through there and literally you get a massive move away from it. And if you're trying to trade that breakout, yes, there's the days when it goes parabolic and it can run and run, but the higher probability is that it fades back in on the first pop up. Yeah. Looks to me like a big chop fest, though, Nick. I don't. This is the thing, and it's like you could get long here, couldn't you, on the DAX? But what are you expecting? What are you expect? For me, like I need to feel like we could be. Like obviously, it's not my strategy or anything like that, but I know. Could you be thinking we're going to run to this side of the opening range and test up there? Potentially a trade or a scalp for somebody. I don't know. There's nothing happening, is there, guys? Sorry to be so downbeat about it, but it just doesn't fill me with joy, this price action. We ain't going anywhere, it's rubbish. So I think I'm going to call it a day here. Have a look at it though, guys. Have a look at that pack system. I don't know if it can make any sense for anybody. I personally, I think you've got to give anybody the sort of... Listen, if he's been in the S&P 500 pit and he's done that for years in there, then I would suggest the guy knows what he's talking about. I don't know if it can make any sense to anybody. If anybody has a look at it, have a look at it on YouTube. His videos are on there, so it might be interesting. You might learn something at the end of the day, and you might not. But I would suggest that if you do try and start looking at that type of stuff, you've got to be very quick on your mouse. So yeah, so thank you for everybody stopping in. Hopefully you'll drop in tomorrow, and hopefully we'll have some movement, and we'll be out. We'll get a direction up or down. That's what I'm hoping. By tomorrow we'll have some sort of clearer direction to what potentially could be happening. But thank you very much. I'm going to get back into get back testing this oil strategy this afternoon. I want to try and delve into it because I think there's some good edge there for me. So yeah, have a good day, and I hope you will smash it, and hopefully see you back tomorrow, guys. Take care and see you soon. Thank you for stopping in.